Hello, fellow compounders. Could you beat Warren Buffett at investing? Probably not, but do you really need to? What if you're okay with being in the top 25% of all investors in the world? In a recent SPIBA report from S&P Global, using data from the end of 2021, the S&P 500 outperformed 74% of actively managed funds over the past 5 years. So, if 3 out of 4 professional investors can't beat the index, what chance do you, the individual investor, have? Should you throw in the towel and just buy the index? In this video, I'll give you 6 reasons for being a passive investor and just invest in index funds. And at the end of the video, I'll tell you the set of indexed ETFs that I use in my investment portfolio. Welcome to the Always Be Compounding Club, where we share ideas on how to build, grow, and enjoy wealth. I'm your host, Dennis Chen. I'm a full-time investor and CFA charter holder. Welcome aboard. So let's get started. Here are my 6 reasons for being a passive index investor. Number 1, attractive returns. You will outperform 3 out of 4 active investors. In 2008, Warren Buffett made a $1 million bet that over 10 years, an S&P 500 index fund would beat a fund of actively managed hedge funds. Buffett won, hands down. The S&P 500 earned 99% versus the hedge funds 24% over those 10 years. Number 2, minimal effort level. You don't have to do much work. Just decide which indexes you'll use, set up an automatic investment plan, and that's it. Just look at your account once or twice a year and during tax season, and you're done. Number 3, broad diversification. Buffett said that diversification is protection against ignorance. That is good for most investors who don't want to put any effort to learn about stocks. The indexes provide a widely diversified portfolio. It's like buying forest, not individual trees. For example, if you invest in an S&P 500 index ETF, you'll be investing in 500 of the largest publicly traded companies in the US. That is ample diversification. Number 4, low cost. Another benefit is the cost of management. Index funds from Vanguard, iShares, Schwab, and Fidelity have fees that are less than 0.1%. That's 10 basis points. For example, Vanguard's S&P 500 ETF has a fee of 0.03%, 3 basis points. This means that you are paying $3 a year for every $10,000 invested in the fund. Number 5, tax efficiency. The index fund is generally more tax efficient than an actively managed fund due to its low turnover. It doesn't sell too often, so it has fewer capital gains distribution compared to active funds. The only one that could beat the index fund on tax efficiency would be an individual investor who buys and holds for a very, very long time. Number 6, easy building blocks for asset allocation. If you wanted a world total stock market or a world bond market, it is easy to find an index fund to match your needs. If you wanted specific sectors like real estate or technology, you can find them also. It is very easy to build a portfolio using index funds. So there you have it, 6 reasons to be a passive index investor. But before you throw in the towel and take up index investing, check out this video where I make the case for buying individual stocks. Personally, in my household, we are split between both camps. You could say we are eclectic. I'm an enterprising or active investor. I pick stocks. And my wife is a passive index investor. So, what kind of investor are you? Enterprising, passive, or eclectic in between? Let me know in the comments below. As promised, here are the indexed ETFs that my wife and I hold in our portfolios. Number 1, VTI, Vanguard Total Market ETF. Number 2, BXUS, which is Vanguard's Total International Stock Market ETF. Number 3, VOO, Vanguard's S&P 500 ETF. Number 4, SCHD, Schwab US Dividend Equity ETF. Number 5, BNQ, which is Vanguard's Real Estate ETF. And number 6, SCHA, Schwab US Small Cap ETF. If I had to choose only one index, I would probably use VTI, and I would just set it and forget it. Check out this other video where we show Buffett's wise portfolio using 2 index funds. Thanks for watching. Remember to always be compounding. See you in the next video. Take care.